Good morning, everyone. Welcome back to another episode of Capital and Context with myself, Mark Insley, and Sam Hallett.
Good morning. How's your week been?
It's been good. Yeah, it's been good. Yeah, came back. Been back and forth again between Cape Town and here. So, yeah, got a bit of a tan.
Yes, you do.
I think you noticed.
I did.
Yeah. Hope for a nice bank holiday weekend this weekend to continue
Indeed.
that. This week we are going to cover a market that we haven't spoken too much about. It sort of is one of those markets that, because it had such a long period of being flat and kind of stuck kind of where it was economically and probably stock market wise. It isn't the sort of one of the most heavily spoken about markets, but it is a market that, if you look from Pokemon to TVs to computers, has and will continue to have a major impact on the world, and that's Japan. So I think we'll just kick off with maybe just some general comments around what the index is and what the bonds are in Japan, and just sort of a general overview of where it is in the portfolio and your very high level feelings before we get into topics on Japan as an equity market.
Yeah, sure. So I think, as you said, that is the old story with Japan. I think the story changed about 10 years ago. We'll go into reasons why that is in a minute. The major index that we actually look at as a topics, obviously there's the Nikkei as well, but Nikkei kind of concentrates just on those 225 biggest firms, whereas we tend to look at things on a more all cap basis. So that includes smaller companies as well. But, we had people saying about quantitative easing over here. Well, Japan is practically, the grandfather of that whole system, and, had very, very low bond rates indeed until a couple of years ago, basically were negative for a long time. Good job we don't hold any Japanese government debt, because obviously that has particularly hurt those people that still hold that. Don't know why you would. But I think the story now has changed quite a lot over the last 10 years.
Yeah. And what was, going back many years, but we're kind of, I think, through, previous highs, but Japan was very high stock market wise. And what was it historically that crashed it and brought it down into those doldrum years?
Typical bubble story. It was an 80s story. You got to think we're talking about a time when the world was a larger place, and information flow didn't happen so instantly amongst people. So it was basically a mania that just got overcooked and blew out. However, Japan, despite being very efficient with their manufacturing process and all of that kind of aspect, the actual human productivity is excellent in Japan. But what they were terrible for was efficient capital management, and that's the story that's kind of changed over the last 10 years or so. Yeah.
Okay. And where are we politically in Japan at the minute? What's the makeup politically?
So, crikey, we're halfway through the year to the point that I can't remember if it's 2025 or 2026 when I'm talking about this, but they've got a new prime minister, the first female prime minister of Japan. Okay. I'm not going to try to pronounce the name because, that feels like an invite for complaints to the podcast. But it's quite interesting. So we've had basically a very fiscally conservative Japanese regime for a little while. Obviously, everyone talks about Abenomics. Yeah. But this was kind of like the period in
between.
Off
the last prime minister.
Before that. Okay. The one that replaced him was quite fiscally conservative. The lady who's come in now is wanting to spend money on growth initiatives. So that's not just loosening the tap in a socialist kind of way. This is very much look, we're going to spend money where we see that there's value in it producing increased growth opportunities. So that's very good. Also as well, the party's think tank committee has put forward a proposal for because Japan has actually got the largest pension scheme in the world. Okay. And so basically put forward a proposal for an asset management kind of committee, which actually then brings the possibility of some really powerful capital being committed into certain projects that has growth potential, and not just that, also into Japanese companies that are doing the right things on the governance factor, which we'll talk about in a second.
Okay. I mean, on to that then. If it's particular companies that you're impressed with, and then I guess it's a
Tee that one
a
up
screening
too
process.
well. Yes.
Screening process to find funds that hold those in the proportions. Are we that sort of micro in Japan, or are we still sort of index driven?
So we do hold an active.
Okay.
But the story that kind of started this all off, we got bored of hearing this in fund manager meetings because they were selling it as if it was a USP. It's like, no, this has been a story for a little while. So basically in 2014, actually I should probably talk about a bit before that. So before that, you had this situation in Japan where there was a lot of cross-holding. So a lot of, for example, like Nissan owned a significant part of Renault.
Okay.
Obviously Renault being French, but they brought this style to it, and Renault owns quite a bit of Nissan. So you ended up with this weird situation where companies owned each other, which just produced really inefficient capital models. You had it's really well known that shareholder meetings in Japan were literally like you'd end up with 2 people attending, kind of thing. Like no one ever voted in shareholder meetings; they're pointless. And so we ended up with this really inefficient corporate culture. Japan in 2014 started rolling out a new corporate governance code, which basically mandated a mindset. Look, we're going to name out companies that aren't doing what I'm about to mention, and also possible delisting from the Japanese stock exchange, from Tokyo Stock Exchange. So that'd be things like you need a certain degree of share buybacks if you're not if you've got too much capital, because Japanese companies have a huge amount of cash on their books.
Sure.
Ridiculous. Like there's quite a lot of cases where the market cap of a company was less than the cash they held.
It's quite a Japanese thing, though, right?
Yeah, very much. So they're trying to westernize it and get rid of all of that kind of thing. Get rid of these cross holdings. The Japanese pension funds are voting down directive remuneration kind of things. The shareholder meetings are actually worthwhile going to now, and all of these things really help bring up, not necessarily increasing in yen terms earnings, but increasing earnings per share, because there's all the buybacks going on and just far better capital governance. They're using all this masses of cash to reduce literally the share count by free float.
Yeah. I guess then if I just sort of twist you back to levels, we've on the advisory side, I think the last 2 to 3 years we've used more Japanese structured products in terms of being the actual index than we ever have in the past. I mean, we love structured products, but we're quite vanilla in them. That we don't go out and self-structure like three random indexes and stuff. So it's nice, as you say, that the Japanese indexes. And I think probably a sign of, I wouldn't say market maturity, but appeal and wanting to index structured products against things other than the FTSE 100. We've probably tracked the level of the Nikkei. Most of those are Nikkei, not topics, I believe. Stand to be corrected by Claire on that. But yeah, I guess from seeing those, looking to roll into a plan the other day, the Nikkei was what looked a very high level. So you've sort of said lots of good things going on in Japan. Is that reflected, or is there still elements of value in Japan? And obviously, if we can push you to whether you're, as a result, under or overweight in your portfolios.
Yeah, sure. So I think the story on the corporate governance is very well known about now, and it's kind of quite you can see how you can forecast things quite well on that front, which means that I think that is now quite well baked in. I think the new government cabinets further reforms, I think, haven't yet been priced in, so I think that's a bit to help pick things up. That'll probably take another couple of years at least to come on in. I think the thing that we do need to be wary of is that we are in an environment where, obviously Japan has had a great run now for a good couple of years. So whether there's a little bit of a pullback there, but I think the 5-year narrative it would mean far much more than even 2-year kind of pullback. I think the 5-year narrative is more powerful. I think it's still very much a value play. You're looking at a PE differential to like the US of like 40%. Its PE is pretty similar to the UK, despite the fact that actually you have companies that are probably far more disciplined on actually on how they're run. Just as I said, it was just the capital was just a bit inefficient. I think from a negative standpoint, there's going to be always the usual caveats when it comes to Japan. Aging population. They're starting to open up more now to immigration. They used to be very hostile to that, and I think it's necessary. I think you need to be aware of those kind of elements. And not just that, let's not forget, you always got to have in the back of your mind a little bit of geopolitical risk with China. What goes on with Taiwan? If there is a Taiwan military action by China, Japan is frankly going to have to get involved, I'd imagine. And Japan will be, from a market standpoint, be hit pretty hard off the back of that, I would assume.
Hopefully they can save that for 2027 at least, after everything that's happened this year.
Yeah, please. Yeah. We're scenario planning it like mad, but not the base case is not this year.
Yeah. Okay. And portfolio position, generally overweight? Under?
It's marginally overweight.
Okay.
The reason being is because Japan makes up a pretty small part of our benchmark, so we don't need to put much on extra for it to have a difference.
Yeah.
In terms of the holdings that we have, this is just stating, this isn't a recommendation. We hold Nomura, Strategic Value Japan. Now Nomura, we chose that pretty much went out of our way to choose Nomura as a fund house to hold in Japan. Reason being, they're Japanese. I mean, whereas we get into our slide decks, we're showing all the times like, yes, we have like an office with 4 people in it in Tokyo. It's like, yeah, but these guys know exactly what's going on. There's none of that kind of awkward cultural kind of worries to worry about. They know exactly what's coming out. So it made complete sense for us to hold them. That's doing particularly well. They concentrate more on the mid-cap kind of space, which is possibly the next area where that governance element's going to feed through. It's very much happened in large cap. As you go further down, it takes a little bit longer to mature. So concentrating there. As well as we hold the Fidelity Index Japan, just holding a small amount there just to, in part so that we definitely keep track of what's going on, but also because you don't necessarily always want to be completely active.
And I'd understand why we wouldn't, or generally multi-asset managers wouldn't hold a lot of Japanese bonds given the size of that market versus UK and US bond markets. But when you say you only hold a small amount in Japan, I probably should know the number myself, but
it's high single digits.
But it's still like 6 to 10%.
Somewhere between 6 to 8. Obviously, it depends across the portfolio.
Yeah.
But
so so it's still a significant position. It's just we're never going to hold 25% or something like that. Yeah.
And at the moment, we hold no Japanese bonds whatsoever.
Yeah. I guess in portfolio 5, we could at some point, maybe hold 10%. So it's still
absolutely
still a big potential market.
Absolutely, that's what I mean. You don't necessarily have to hold a massive amount for the active difference versus benchmarks.
Is it similar size to Europe, or where would Europe sit next to Japan in terms of sort of?
Europe is a little bit more.
Yeah.
Europe is in the teens.
Yeah.
Like low teens, but it's certainly there. It's a case of, I think looking at 2026, I think Japan has more going for it than Europe. But we'll wait for that for our Europe episode.
No, understood. No, I know you. Yeah. So we've got to find places to add, and if Japan's one of those, then
absolutely
great. And anything structurally that puts you off Japan? Like we've sort of spoken quite positively about it so far, but anything in there that is something that you'll sort of keep on your radar?
I think you got to keep an eye on the Bank of Japan. I think the thing that has really mattered a huge amount when it comes to markets in Japan over the last 3-4 years is what's been going on in yen. I remember going to 2024, going to a conference where they were saying like yen at 160 to the dollar would be really bad news. Well, that got blown straight out of the water a couple of months later, and we're still here. You know what I mean? It very much comes down to the real yields that basically the Bank of Japan is offering. There's still a potential thing, like Japan was suffering from deflation for a very long time, which is why those yields were so low. Whereas now, it's how good is the discipline of the Bank of Japan with being able to contain inflation? There's a chance that they might be running a little bit hotter on inflation than perhaps they want. And there's the political risk of that as well. Got to bear in mind you're dealing with a population that is very much not used to prices changing. And and in yen terms, their salaries haven't changed, but now prices of things are starting to move up. So the political risk that goes on there. So I think you need to be aware of what goes on in that space there.
Yeah, and I guess this might be a story that's sort of slightly old now, but I remember reading around. I think Japan has one of the most aging populations in the world. How does that sort of affect the Japan story, or is that something that's been and gone as a
I wouldn't say it's been and gone. It's something that's very much baked in.
Yeah.
I know that quite often when I get fund managers, presentation, they're including like plays on aging populations, whether that be a healthcare thing or kind of that aspect. So that's quite well played. I'd say if anywhere, the play for that, straying away from Japan slightly, the play for that I don't think has been baked in yet is China. China is in a lot of ways is Japan 30 years ago. What's going on in terms of that narrative, and including frankly on what's going on in the investment space as well. I think that covers that.
And then I was looking at a map of Japan the other day.
Was that on the wall behind your desk?
No, I think I lost a bet to my partner on the number of islands that make up Japan. So
that's an impressive.
Yeah, I'm on a bad little run at the minute of losing bets. I never used to lose these little bets. But
great! So the one person you won against recently has been me on this podcast.
Yeah,
great.
Yeah. But yeah, bringing it back to investment theses. Obviously, Japan is a major exporter of its products, be it chips or things as we spoke about. How does the domestic and sorry if I'm putting you on the spot here.
No.
How does that sort of island driven structure affect Japan like domestically, or is it just not really a factor for us at all? Like
it's not particularly something that I worry too much about, but it's interesting you focus on the domestic bit because that's one thing that the uptick in inflation actually does help spur on. You think if you worry that something might cost you 10%, I'm exaggerating here, but 10% more in 6 months, you're going to buy it today. So that uptick in inflation does start to push the domestic economy on a little bit more. Okay. So that's one thing that people have been very much waiting for is inflation to start to tick up. So that is another area where active fund manager has been on at the moment. Similarly, actually, strangely, inflation has been quite helpful for property prices in Japan.
Okay.
That's an area where the price book has been quite interesting ratio to keep an eye on.
Okay. Great. I mean, it wouldn't be an episode on Japan without a quick Pokemon discussion.
I mean, my Pokemon knowledge is limited to the late 90s, whereas yours is a bit more. I imagine they've got all new characters and that kind of thing, where I'd be completely out of my depth.
Still is flourishing. No, I mean, I can't believe how big the...
Well, Tamagotchi's come back around again.
Yeah. But yeah, the Pokemon market is still in Japan, and obviously we have Japan to thank for Pokemon, and yeah, one of my favorite new pastimes. So yeah, I'll be making a trip to Japan at some point, I think, just to go and pay homage. The things your children get you into.
I should point out, just before we started recording, I mentioned to Mark that I'm pretty sure I had my, the original 90s like trading packs, to which Mark kindly offered he would grade the condition of them, which I know for well known Mark means I'll give you a lowball price that I can flog for more.
Come on, Sam. No, but yeah, great. I'm glad we've covered Japan, because it's as I say, it's a market that I do find interest in, and yeah,
I think the other thing that one thing that we haven't mentioned that I will just touch on, because we've concentrated on Japanese market and Japanese economy, is actually how important the Japanese investor is across the world. The flows of, because Japanese bonds were zero for so long. Where are they parking their money? In US Treasuries.
Right, okay.
So one of the big things that people have been worried about is if Japanese government debt starts yielding decent in real terms, that hasn't quite there yet, whether the flows might reverse, and then what happens, and then obviously what happens to US equities and all of that kind of thing. So the Japanese investor is actually considered really important within global asset allocations.
So that's an unwind from US equities, you think, rather than US bonds?
So it'd be an unwind for US, well, it'd be both, but obviously the unwind from US bonds affects the yields of US Treasuries, and then obviously the discounted cash flows in the future of US equities and so on and so forth. So that's one thing that people have gone a bit quiet on over the last few months.
Okay,
but certainly something that came up around about 12 months ago is a need to keep an eye on thing.
Yeah. Okay. Good. Another episode done.
Fab.
Yeah.
We've nearly done 15.
Yeah. Not bad. Good consistency.
For us, this is very consistent. We're normally terrible for keeping up regular meeting slots.
No, but yeah.
I'm going to have to move a monthly meeting that's booked in for later.
No, all good. And yeah, as ever, thanks Jay and Issa for continued efforts on production. And we'll see you again next week. Thank you.
Thank you. Bye-bye.